Hello everyone, hope you're doing well. Welcome to another episode of Monday Markets, as always brought to you by WooX. Links available in the description below. I believe we've crossed the $1 million of volume traded threshold, so people are using the exchange, that's cool. More importantly, if you have any feedback, questions, concerns, you can tell us in the comments or privately, and we have a direct line of contact with the team. We can get stuff fixed pretty much on the same day. There are fee revamps incoming, there are UI and UX changes incoming, and lots of other things, so it's a really good time for us and our relatively small community to work closely together to improve things and onboard your feedback. So if you want to check it out, links in the description below. You can also read my tweet thread, which talks about the pros and cons of the business model, transparency, execution, all this other stuff. So if you want to try it out, click and you will support the stream by doing so. Let's get straight into the markets portion. I won't go over the monthly time frame because, as we've discussed, it's neither at support nor at resistance and is of limited use to us for the time being. I think the weekly and the daily for both BTC and ETH hold the most useful information. So as far as the weekly goes, when we last spoke, it was kind of breaking down, and that is still the prevailing view of the market so far. If you wanted to make a bullish argument, it would have to be on the back of these spikes. So the market came into the weekly wicks, poked through them and closed above. So if you're going to try to paint an analog to that, again, contextually, forgetting that for a moment and just from a price point of view, you have something similar to the 20k consolidation where you had the market in a range, it poked below it and then traded higher. Obviously, I'm not expecting the move of the same magnitude given the news and everything else, but purely technically speaking, it's the same type of weekly spike and reverse that the market may be printing here. Now, it doesn't look amazing because, again, purely from a candle close basis, there's no weekly support around these levels. As we said, the most generous version of support we could come up with was the lowest close just under 28k, and the market has broken below that. But for the time being, we have a spike and reverse type of setup. So on the weekly, I still think the clearer trades are more likely to come on a larger pullback to support from basically 24 to 20-ish. Sort of this pre-breakout cluster is a clear weekly area. Everything else is slightly less clear. Maybe if we spend some more time here, we'll get something else. My other concern is if this is going to be a weak market, usually these spike setups end up punishing the early sellers, but only insofar as getting the market to the next level of resistance. I think on the weekly, that level would be as soon as this lowest close here at 27.6, because it is the lowest close before the weekly made a lower low close. So you can have this as your support turn resistance flip. And also bearing in mind, it is quite early in the rally, quite early in the week rather to rally. This kind of Monday stuff tends to revert a fair bit unless you're into a trending week. So generally speaking, on the weekly bigger picture, the 21 to 24k breakdown support is clearer. We have a breakdown on the weekly in the form of a lower low close. We have a spike and reverse setup that's already playing out, and the relative risk to reward of chasing that spike and reverse setup is kind of mixed because we're already coming up to the weekly underside at 27.6k. So I think the easy portion of the spike setup has likely played out, and the relative risk reward of chasing it into 27.6, 28k and beyond to me is slightly less attractive. Okay, so that's the weekly view. Obviously, if this evolves and ends up closing the week above 27.6, then we can make a short-term bullish argument that, hey, look, we had this point of breakdown, the market spiked all these lows and then closed back inside the range, and then maybe we can target the highs or something of that nature. But for the time being, we don't have that available, and we have to look at the daily time frame to give us that sort of guidance anyway, given the weekly time frame takes quite a while to close. So on the daily time frame, in order to assess this argument, we can see that we land at pretty similar levels. More specifically, Don and I were talking at length about this daily cluster at 27.4 to 26.9-ish, or basically 27 to 27.4 as this type of daily consolidation. And you can see the market had this nice wick here, and we actually spoke about this on Monday Markets, I think for 2 episodes straight, where as the market was trading lower, we had a question of let's spike these lows to see who's hanging out below there, and the market ended up closing as a swing failure pattern, sort of spikes the lows and closes above them, and is then pushed to the very pinnacle of resistance. So at the moment, the relative risk to reward of chasing this alongside, at least for my system, isn't there because, again, most of the obvious spike trade has played out and the market now is at the extremity of resistance. So I think if the market closes the daily below here, that would just count as a bearish retest. I think if it loses the bottom side of the cluster, then it would start to really look kind of roll overy. in that case, it will have spiked the cluster top, closed below the cluster bottom. That just looks like a breakdown, okay? And if you wanted to make a bull case and for that weekly type of argument to come to fruition, I think at the very least, you need a daily close above the upper boundary at 27.4 or thereabouts. And then we can make an argument that having done that, we are now back inside the old range, which we can define in the following way, between 27.2-ish and the range high at 29.5. And then if the daily closes above that area, then we can make the argument that not only do we have a weekly spike, but the daily closed above the upper bound of resistance, which means that this was the deviation. We now have a 27.23-ish reclaim. And then we can reasonably target the range midpoint at 28.3, 28.4, and the range high at 29.5. The daily time frame doesn't quite support that view yet. It's still very much into resistance. But if this is not going to be an early week fade reversion type of pump candle, then I think if the daily closes both back inside this recent daily range and in doing so also above the daily range high, then your first bullish argument for squeeze continuation becomes available, okay? So bigger picture, a squeeze that's already played out into resistance. At this point, if you didn't catch it, I think it's worth waiting. If it starts to roll over and specifically lose the cluster low and this boundary here, I think that is evidence for continuation and that the squeeze is done and the market's going to trade lower. If you're waiting for bullish signals and the market's going to spend more time in this range and that the weekend-ish price action was a deviation, I think at least a daily close above 27.3, 27.4 gives you a clearer invalidation, makes that argument higher probability to target rather straightforward range midpoint and range high. Okay, so very much at a decision point. And I think the easy portion of that leg has played out. We're at the pinnacle of resistance now, so I think that's worth waiting for, okay? As far as ETH goes, still quite a frustrating chart because the weekly time frame keeps teasing a weekly breakdown, which hasn't happened yet. It's moving very slowly, but we've not even had a real impulse. If you look at the last red weekly, it didn't even make a lower low close like BTC. It pretty much traded into that consolidation and bounced. Okay, so no unfolding on the weekly time frame yet, but I still think it's the most useful time frame that until proven otherwise, this is our failed breakout. If the market wants to invalidate it, it has to do so above 2000, and everything else here is just a test of our patience. Okay, and I think the same ranges apply whether you want to charitably go from 1.9 to 1.4 with a 1.6 mid, or from 1.9 to 1k with a 1.5 mid. I still think that's the weekly view until proven otherwise, but I am getting a bit jumpy about this given it's had every opportunity to dump, hasn't done so yet, but it's not entirely clear whether that's strength or an absence of patience from my end, and it helps that the S&P has just been very choppy, so we have sort of mean reverting crypto flows to deal with anyway. I won't really attempt to insult your intelligence on the daily time frame given the weekly is so much clearer and the daily is very choppy. I'm sure you could do what we did last Monday markets, which is outline some version of the pre-breakout cluster at 1900-ish, and that's still resistance, still proven otherwise, and is supported by the weekly time frame view. We know that also has some confluence with the former range high for wicks if we go all the way up to 1980-ish, but if there are going to be lower highs, they need to come from these areas, and I still think there's a decent chance that the daily ends up rather choppy and that the weekly view should inform directional bias going forward. Okay, I don't think there's a ton to do on the intraday. If you wanted to break these daily ranges down into lower time frames, you could do so, but the daily encapsulates them quite well. If you are of that mind, I'd probably go something like this, from 1800-ish as the range low to 1950-ish as the range high. That's been rather good. Intraday, that's been a reclaim so far, which is decent. Again, not supported by the weekly, which makes it lower probability, but purely from a day trading point of view, at least these levels tend to be good. Overshot the range high, market seems to be sensitive to the range midpoint, and some nice price action at the range low. So I think if you're short-term trading, those are your levels, bearing in mind that if you're playing the long side, it's available, I think, on lower time frames, but the weekly is against you, so I would manage those positions slightly more carefully. As far as altcoins go, this still gives me some discomfort that we're in PvP scam each other with meme coin season. At least the bigger signs of froth have been sort of washing out slowly, as we talked about on Casual Friday, with a lot of weakness across the big coins. We saw a weekend bid on some memes, and some one-off names like LDO have been very strong. This is obviously a magic level where I went all in at the bottom and definitely printed money on this trade as opposed to ignoring my own levels. But yeah, some bounces on altcoins from mid-range levels, but as you can see across the board, it's not an everything bid, just a few outlier names doing far better than others, still seeing that same concentration of capital among a few names as we've seen previously. Maybe we bring back Altcoin Thursdays this week to cover this in more detail. If that's something you want to see, leave a comment, and I think I can squeeze an episode in this time around if there is sufficient appetite for it. But bigger picture, I think it's, BTC, this daily cluster, will pretty much determine bias going into the rest of the week. So if you're going to have at least one level to watch, that would be it. And then if the market pushes further, I think you can extrapolate that to this daily range, and you've got really good areas to do business. As far as ETH goes, I still think the prevailing argument has to be the weekly failed break until proven otherwise. It's really taking its time, so maybe it is strength. If it is, it should manifest on the intraday and lower and daily time frame. As far as the intraday goes, above 1800 would be the necessary starting point. And if you want to start fixing the daily time frame, you have to do so with closes above where the fake out took place at 1910 or thereabouts in order to start to threaten the weekly failed break picture and make it look better. For the time being, my prevailing view is that we've had a spike and reverse setups into some sloppy selling through the lows. A decent chunk of that has played out through the bounce, and now the question is whether there is more to squeeze or not. And given the daily is at resistance in most cases, we'll know within 1-2-ish days whether there's anything left. That's really all I have to say. Again, a slightly narrow focus this week, but that's how the price action has unfolded. And again, if you want to see some altcoins, let me know in the comments, and we might bring back a special episode of Altcoin Thursdays. At least I'll dump the market if precedent is anything to go by. That's all from me. Just like to keep it short and sweet to respect your time. If you enjoy these videos, leave a like and subscribe to the channel. Again, as always, the show is brought to you by WooX. Lots of educational material, resources, disclosures, all that type of stuff available in the description. And check it out and let us know if we can make any changes and improvements. That's all from us, and thank you for watching.